Good afternoon, this is Brian Shannon from AlphaTrends Blogspot. It's Wednesday, February 7th, 2007. The market's closed. Let's take a look and see what happened today. The S&P 500 gained 16 cents if you measure it by the spiders I have on the screen right now. As once again, it's a broken record here, but the market continues to drive higher. We've got a rising 50-day moving average, and we're going to consider this market innocent till proven guilty until that moving average flattens out or starts to turn lower. So don't look for me to be picking any kind of top in here based on any oscillators or indicators or any other PE ratios or whatever it is you want to look at. Picking tops is the hardest job on Wall Street, second only to picking bottoms. So what we're trying to do is to go along with an established trend. In this case, it's the uptrend, and as long as it is, the odds will continue to favor buying stocks instead of selling them short. If you're selling short, you're getting what you deserve, which is losses. Just like anyone who tries to buy a stock going down deserves the losses they get as well. Not to sound mean, it's just the harsh reality of the market. If we look at the 10-minute time frame that I have on here, it was looking like distribution, and yesterday the market kind of had a little bit of a shakeout, not too bad, down to 144.30 where we saw support. And I said that basically if you held a gun to my head, I'd say we'd probably continue higher because the overall trend is higher. And we did see a nice rally early on. It held on for most of the day, but then we did get some selling, and it came right down to that rising 5-day moving average. So perhaps we're going to go sideways. I think right now that the important level of support is right down here at 144.30. Unless it breaks 144.30, I think that you have to continue to look favorably at this market. Below 144.30, I would probably say that you want to tighten your stops and probably exit some of the positions where you have some winners in there. So looking at the Nasdaq, what I've been saying in here is that this daily time frame is just flat. It's neutral. But when we take a look at the intraday time frame, like the 30-minute time frame in here, what I was pointing out was this inverted head and shoulders pattern with resistance at about $44.35, $44.40. And I said that breaking above that level would put the buyers firmly in control, and that it might take the short sellers off guard, and we could see a sustained rally up towards the height of this pattern, which is, if I remember correctly, well, let's just call it about $1.25. So if we add $1.25 to the breakout point, we'd be looking at a market that's at about 40, close to 46, 45.75 or so. So it looks like right now, let's take a look at this 10-minute time frame to get a little bit more accurate look at it. It looks like the market broke past that level of resistance. It came down, scared some people, took out the non-believers, and then was able to close above that 44.40 level. So that's good to see that it did close above there. It puts the buyers back in control and really keeps those shorts off guard. We do have a higher, we can look at this as higher lows right in here. So I think now that this 44.25 level, if the market breaks below that, then it's time to get very defensive. But I think this market does have the potential to continue higher here and take these shorts off guard. Let's look for initial resistance, probably right around that 45.20 or so area. But I do think that there's enough shorts in this market that supply could become a potential source of demand that pushes this market out to higher highs and new highs for the year. The market, of course, is being led, as we know, by the mid-caps. And the mid-caps, we've been looking at this inverted head and shoulders pattern in here and looking for a target of 155.5 to 156. And this market just continues to march forward. Again, the last couple days, it's looked like the volume has dropped off, and people have been concerned about that. Today we had another pickup in volume. Volume doesn't pay. The only thing that pays is price, and price continues to march forward, making higher highs and higher lows. So that's what you need to focus on. Forget everything else. It's price that pays you. Don't forget everything else, but take it into consideration. But the weight of evidence goes towards price. Let's take a look at the stocks we've been involved in. Hoku, H-O-K-U, we hit this one pretty good by buying it at $5.20 on Monday. And let's drill down to a 5-minute time frame here. We got involved, though, at $5.20. Got lucky with that gap yesterday. Suggested selling half of it at about $6 a share and raising the stop on the balance to $5.65. So we were stopped out of the balance with a gain of 45 cents, and the rest of the position we gained 80 cents. So about 62 cents average, or about 10% on HOKU. That was a nice one. Ameritrade, AMTD, what we were looking for in here was a purchase. We did purchase at 1770. I set the stop a little bit just below this low right here from yesterday, and we did get stopped out with a small loss, 7 cents a share. But then the stock did continue to rally. So my stop was a little bit tight. Hopefully you guys were, made an adjustment and were able to hold on to it, because it looks like it should still continue higher, but I'm not going to update any further. Adobe, we were short Adobe from yesterday at 38.45 after this gap failed right in here, and I had suggested lowering actually your stop to 38.52, and the market gapped higher, so we'll take that opening price as where we got stopped out. So I'll say we got stopped out with a loss of 25 cents in Adobe actually. I'm looking at the next stock, which is Financial Corp, symbol DLLR, and the play in here was to look for a pullback to $29.90. So we saw the pullback, we saw this first rally. You shouldn't have bought here. What we were looking for was a pullback to $29.90 and then to buy strength above 30.05. So we got involved late in the day at 30.05. At this point, I would say your stop should go right under here. So yesterday I said the stop should go at 29.65. Let's lower that by 2 cents to keep it under today's low. We'll say our stop right now is $29.63, which would give us a theoretical risk of 42 cents a share in shares of DLLR. Respironics, symbol RESP. I'd suggest to get involved above 41.90. Let's say we got involved at 41.95. And at this point, I'd say raise your stop to break even in Respironics. Stock does look like it should continue higher. ICGE, that's Internet Capital Group. We wanted to get involved above 11.25. That did occur here. Let's raise our stop to $11.15 right now for a risk of just 10 cents a share. And STLD, Steel Dynamics. Steel Dynamics, we were looking for a pullback to 38.50. We got that pullback to 38.50 early on, and then we were to buy strength above 38.65 right here. So the stock then rallied up to 39.20. So it rallied in here about 55 cents. I said a stop should go at 38.40, which would have stopped us out down here. But I'm going to say that you should have broke even on this trade. If you get a stock that moves that rapid, early on, that in order to, if you're going to let go of a profit like that and take a loss, you're not getting this. You need to brush up on your trading skills, because there's no reason to let a profit of 55 cents turn into a loss of 25 cents. It's inexcusable. Next up, we're going to take a look at the last stock that I had mentioned, which was XING, is all I know it as. And I said we want to buy this stock above 16.35. So the stock opened within a reasonable range. Hopefully you were able to get this, because it really rallied very nicely, almost up to our target of 17.5. If it hits the target, consider selling half the position. Right now, what I would suggest, though, is raising your stop to $16.95 in XING.